Welcome, everyone, to the inaugural summit of the Princeton DeCenter. We're really excited to launch this truly interdisciplinary initiative, unlike any other, I think, out there. And we're really thankful to you for coming, for participating with vigor, we hope, and for helping us shape the agenda for the DeCenter and for the role that academia and scholars can play across technology, applications, and policy and societal impact in this important emerging area. Many of you have traveled to come here, and all of you have taken valuable time out of your days and lives to be here. So we really, really appreciate it very much, and we hope to make the most of that and make it worthwhile. I'd like to start by thanking our founding donors for this initiative, who had the vision, the initiative, and the belief, without which this would not be possible. Pete Brigger, Joe Lubin, Dan Moorhead, Mike Novogratz, they're here. They're all very accomplished in their fields and in their professional careers, of course, and they've all come together to help us do something really special here at Princeton and also beyond Princeton. Joe, Dan, and Mike have a common claim to fame, which is that they were my classmates at Princeton. And as Chris Eisgruber always says, with more panache than I can muster, in the great class of 1987. Pete has his own claims to fame. Pete was class of 1986, so a year ahead of us here. Pete, Mike, Joe, and Dan, thank you very much for your generosity and what your generosity and leadership have enabled here. And Chris, thank you for your leadership in enabling Princeton to go boldly, venture boldly into this area that is not a stranger to at least a modicum of controversy. I'd also like to say a special thanks while thanking people to Pam Edelman, our interim executive director of the DeCenter, without whom it is for certain that none of this could have happened. So thank you very much, Pam. Okay, so I'm going to walk you through the vision for the DeCenter briefly, and then hand over to Andrea Goldsmith, who's my co-director and also the illustrious dean of our School of Engineering and Applied Sciences at Princeton. Okay, so first we'll start with some house rules. So we're on the record through the first fireside chat with Chairman Benham. And which Andrea will have that fireside chat with Chairman Benham. So anything I say now can be used against me. And after that, we'll move to Chatham House rules. Okay? And that means that people are free to use the information they hear and receive here, but neither the identity nor the affiliation of the speakers nor of any other participant can be revealed. Okay? So please keep that in mind. That allows us to have really honest, frank conversations here, which I think is the most important aspect of today, in my mind at least. You may post about the event. You can like or reshare Princeton's posts about the events on social media, but again, please don't attribute any commentary to specific participants or to their organizations. We have a couple of reporters in the room. Will the reporters please raise their hands if they're here? Great, thank you. And they may ask for individuals for interviews or statements, entirely up to you if you would like to engage or not engage. But again, we're all under Chatham House rules, so there will be no attribution of things outside of things you specifically agree to talk with them about. Okay, so let's get to the DeCenter with that. So the DeCenter is about the decentralization of power through blockchain technology. So you all are very familiar with this, I think. There are these new technologies that are oriented towards decentralizing trust, to enabling trust without centralized entities. So when entities that don't know or don't trust one another want to transact with one another, the way we have to do it in society today is through centralized intermediaries or centralized entities. And the question is, with these technologies, can we decentralize that? And that decentralization of trust has the potential to decentralize power in society. We'll talk about this a bit more, and that creates the opportunity to reimagine all kinds of systems: financial systems, business systems, societal systems, organizational systems, governments, everything, many things. So that's the potential, but there's also a lot of risk, as we are seeing and have been seeing. And they create a lot of risks in consumer protection, investor protection, various other human rights, other areas like that, crime potentially. And so there are important policy considerations that have to be brought to bear in these areas. So our aim with the DeCenter is to be the thought and impact leader in this highly interdisciplinary area, taking a highly interdisciplinary approach, helping to set, as academics, the proper foundations for it across technology, applications, economics, policy, societal implications, et cetera. So try to be a truly interdisciplinary effort. So what are we talking about here? So we talked about centralization being the way that we get trust in today's society, which is essential for proper functioning. Centralized arbiters keep records, they resolve disputes, they enforce rules, governments, banks, big companies, et cetera. Centralization also provides convenience, which is extremely important at the cost of control and ownership. So the history of control over data has been everybody wants control over their data, but everybody gives it up for convenience, right? That's been the common theme, and that accumulates power to the people who have the data. And centralized entities over time have accumulated immense power in our society. So companies today, as you all know, use our data not just to monetize our attention, but also to influence our behaviors and values, to control speech, and to control the flow of information. Commercial banks profit from being centralized entities. Governments have a lot of control over even our money and our assets, and they influence its distribution. And this excessive centralization takes control potentially away from people, can limit creativity, can polarize quite easily, and can cement the status quo. So that's sort of the overall centralization framing. And now there are these technologies that allow us to decentralize, or on the direction of decentralizing trust. So the Bitcoin blockchain was designed to enable trust without a centralized entity. So people can interact, transact without having a centralized entity in the middle, where the technology provides the trust, so to speak. So that gives you permissionless access, censorship-free access, security, durability. It was founded to build a money, a hard commodity money. And as a result, it's limited in its design and is not designed to run these smart contracts or more sophisticated applications on the Bitcoin platform itself. So Ethereum came along and emerged as the platform to build applications on other than money that can take advantage of the decentralization of trust. Then there were new competitors to Ethereum with greater speed, greater functionality. There have been layers on top of Ethereum, and that's been how this technology has developed. And there have been efforts now to build Bitcoin layers, or layers on Bitcoin that can make Bitcoin also a platform for applications. So there's a lot going on in the technology of this space. And these platforms allow us to have applications in many new areas, in financial areas, like digital gold, composable applications, unbanked, access for the unbanked, basic income applications, asset provenance. In business, the tokenization of assets could be a very big area potentially for these applications. Societal, with decentralized identity, owning your own identity, not having Facebook own it, for example. Control of your data, authenticity. And then foundational things like just digital assets, provenance of assets, immutable data stores. All these things become potentially enabled by these technologies. However, money is involved, right? And lots of different kinds of assets get created in this world. And that creates opportunity for people to do bad things. So it invites bad actors. There's not a lot of regulation in many parts of this area. So it can invite bad actors, risk takers, and a lot of actually centralized entities that come in, take advantage of the situation, and do some not savory things, as we've seen. So that's a big risk in this area because of its nature, because money is fundamentally involved, and because regulation is not yet clear. So there are many opportunities, I think, in this area, but also substantial risks. And we think that we are well positioned as a university to start to sort of develop foundations in this area. So how do we look at this? We look at this as three deeply interacting areas that are all very important. So there's the technology, and the DeCenter sort of works in these areas. There's the technology itself and what we need to do there. There are the applications. This technology is not useful without applications of it, right? So what are the applications that are going to be really important, really positively impactful to society in the near term and in the long term? That's really kind of an open question today. So the applications and then the societal impact, the policy, the risks, the regulation, the differential impact on different segments of society, et cetera. So we think the way to take on this area as academics is not to just focus on the technology. I'm a computer scientist. That's what I do. But it really is to be truly interdisciplinary across these three types of areas. Okay, so in applications, there are lots of questions in these areas. That's what we're here to discuss today, to come up with the important questions that Princeton should pursue. So what are the most important applications in the near term and long term? What are the implications of these applications for how we design the governance, the protocols, the policies, the technology? What's really important should be driven by real world applications. So Princeton's going to engage in building real applications and using those to drive these things. Develop, deploy them, drive integrated research. In technology, what innovations should there be further in trust without centralization? What are the fundamental limits? Privacy, scalability, how do we get all those things? What should the architecture look like of a layered system here, just like we have layered systems in other parts of technology and computer science? And then society, right? We really want to explore the societal risks in the area, and therefore the key policy, economic, and regulatory implications. And we think that the really important opportunities here actually lie at the boundaries of these disciplines, right? There are great opportunities within them, but the really meaningful, really important opportunities are in people, in technology applications, and in the policy, governance, societal areas working together and working at those boundaries. So that's the opportunity in front of Princeton, and I think we're very well placed to do that. So why Princeton and why now? We have all the right ingredients: a very strong engineering school, a pretty good computer science department. Is Jen here? Yeah. Thank you, Jen. No, yeah, okay. Jen doesn't like us very much. And great policy school, great economics, everything that we need. So sociology, many different areas that we're very, very strong in the humanities, in the social sciences, and in engineering. So that's a unique place we're in. And we think the moment is now. Right? And academia should not miss this. You could argue that academic computer science missed the World Wide Web, right? And we should not miss this area. We should be, it's already happening. It's a huge opportunity. Bitcoin is becoming mainstream. Major institutions are participating in Bitcoin and in cryptocurrencies. Companies like PayPal and Square are offering Bitcoin and crypto in their digital wallets. It was called LinkedIn's #1 in-demand hard skill in 2020. And there are also more and more coming out bad actors, loss of capital, consumer protection issues, manipulation, and harm being done in this area. Not necessarily, you can argue about whether it's the technology that does that or it's the opportunity created by these types of assets that do that, and that's part of the discussion we want to have today. It is an early stage, Wild West kind of area still. The World Wide Web was like that for those who were there at the time, but with money very fundamentally involved, right? And so it needs scholarship and it needs thought leadership, and that's what we're hoping that we can come together to provide, because the foundations have to be laid carefully, and universities so far have not really led in having impact in this area. Right? That's just an unfortunate circumstance, and one that we and others are hoping to rectify. Some universities have very sort of technology-oriented efforts in this area. We're trying to do something much broader. Okay, so what's needed? What are the core components of the DeCenter? It's thought leadership. We want to create a vibrant community of people coming together, ideas, very closely connected with the external system. This is the external ecosystem. This is not an ivory tower effort. Host conferences, workshops, and bring in experts, share ideas. So one thing that the Princeton administration understands well, that this is not an area for ivory tower research. This needs to be really deeply engaged with the people actually doing the work, with the ecosystems, with the startup communities. We'll publish scholarly analyses and do balanced research in the societal implications, both positive and negative, and the policy areas. And we'll contribute educational materials and frameworks. We want that close collaboration. We're hiring software engineers as shared resources for people here to actually build applications and technologies, partner with external entities to take things that we prototype and build and bring them out into the commercial world, across what Andrea calls the valley of death, and get out into the real world as real companies and projects and to escape velocity. That's unusual, potentially, for Princeton, but we're going to do that here. And we'll have different partners to focus on different ecosystems. And we'll have funding to deploy projects as well. Okay? But we're going to answer these types of questions like, what is decentralization really? How do we measure it, right? And how do you decide what layers need to be decentralized? What is decentralized? When you have decentralization, does it really lead to decentralization of power? Or whom does power get taken away from? Whom does it get redistributed to? The history of decentralization has largely been one over time of you decentralize something and you re-centralize somewhere else. Like you decentralized internet protocols, but then got re-centralized at the application layer, and now we're in a centralized world. So what needs to be decentralized? What impact does it really have in the shifting of power, et cetera? Those are the types of questions that we really want to address here. What retaliation occurs? What manipulation occurs when you do those things, et cetera? And then education, training, and outreach. We have core courses, already 2 of them in this area. We're developing cross-disciplinary courses, boot camps, hackathons, things like that. And postdoctoral fellowships for people to spend time here and in open source ecosystems and come back and forth between them, promote the development of the key open source ecosystems. Those are all sort of real-world oriented things that we plan to do as part of this effort. And we think that Princeton's motto of being in the nation's service and the service of humanity is really a driving force in this work. We want to treat it that way. It's really about what's good for humanity, what's good for society, and where the risks are, where the harms are, and really take those head on and deal with them and try to work our way through this area and provide thought leadership to it. So that's our vision for the DeCenter. I hope it made sense, and we'll have a lot more discussion about it. And with that, Andrea Goldsmith.
Thanks so much, JP. It's so exciting to see everybody here. We've been planning this event. I think the first conversation about this with Pete was about a year ago. And I remember there was some conversation with Chris about, should Princeton really do this? It's a different thing for Princeton. It's controversial. This is an area where things may blow up, as we've seen in the last few weeks. And yet, I was so excited about bringing this to Princeton, specifically from what JP said about this being at the intersection of technology, society, policy, benefits to humanity. That is really what Princeton is about, bringing those things together. It's our unique opportunity as a university, as a school of engineering. So I thought the DeCenter was really the poster child for what we at Princeton can do special in technology. So I wanted to talk a little bit about that, where the DeCenter fits within SEAS and Princeton, and in the process, say a little bit as a relatively new dean about engineering at Princeton and why it's special here. So as JP pointed out, and as those of you that are attending, and by the way, every one of you is special. You were invited here. This is a closed-door meeting. We did not have open invitations. For all of you to help us shape exactly what questions the DeCenter should answer. What questions are unique to academia in this space? So the whole day is going to be about formulating those questions because often in research, the hardest thing is asking the right question. And then you can get to the answer through traditional means. But it's the questions that we need to ask. And in the DeCenter, the questions are particularly challenging because they're not just technology questions. There are core technology questions, as we'll talk about in one of our panels, on energy consumption, on scalability, on privacy, security. But the really deep questions are the ones at the intersection of society. How does this impact society? What regulations do we need to ensure that we protect users but we don't stifle innovation? What are the applications that can run on top of these technologies? These are the questions that we really need your help in answering, and we want this discussion today to help us formulate those questions. So the DeCenter, of course, encompasses aspects of the School of Engineering. We have faculty in this room and graduate students and undergraduate students that are working on the core technologies within the School of Engineering. But the thing that's beautiful about the DeCenter is that it's bringing in faculty from all across Princeton. It's bringing in faculty from our policy school, bringing in faculty from economics, from political science, from the Center for Human Values, people that are focused on ethics. It is, again, a poster child for what is unique about Princeton engineering, which is that our School of Engineering and Applied Science sits within, I think, the greatest liberal arts university in the world. And we can leverage that in ways that other universities, like my former employer Stanford, can't, because of the culture here, because of the close collaborations, because of the way engineering sits within the broader university, and the focus at Princeton on its informal motto of being in the service of the nation and humanity. That infuses everything we do. It was one of the things that inspired me to come here. And when we think about the DeCenter and the questions that we as academics can ask to use this technology and the applications to benefit humanity, we will be asking the right questions and answering them and having tremendous impact far beyond what you would think one university could have. That's why I'm so excited about bringing the DeCenter here, and so grateful to our donors for really inspiring us. I call them founders. They really are the founders. They're the ones who came up with the idea to do this, convinced Chris and then me and then JP and everybody here at Princeton that we can do this and do this in a unique way that will have tremendous impact. So I already talked a little bit about why the DeCenter spans not just engineering, but all of Princeton. I think it is a microcosm of what is special about engineering at Princeton, that in our engineering school, we do create technologies, but those technologies are created within the broader university context with the benefit of our colleagues across the disciplines outside of engineering, in science and humanity and the arts. And I think that's what's really special about Princeton engineering. It's what brought me here. If you walk around this campus, you will see that we are growing engineering. All the construction that's down the hill from here is a new neighborhood in engineering. We're growing our faculty, hiring 30 net new faculty in the next 3 to 5 years, including in this space. So if you know a faculty candidate in this area, please send them our way, because we really want to make Princeton the thought leader in this area. But before I hand this over to our illustrious president, I did want to say why I think Princeton engineering is special. And as we grow the school and its impact, we will be able to meet the informal motto of Princeton in benefiting humanity through the technologies that we create and through the questions we ask about those technologies in the broader context of humanity. So with that, I'm going to first say one thing about the day. We're going to start with opening remarks by Chris Eisgruber. We then have a fireside chat with Rostin Benham, the chairman of the Commodities Future Trading Commission. Our first panel is on blockchain and its applications, and that panel will be followed by table breakouts, where we're asking each table, we'll do this for 3 of the 4 panels, to think about the 3 big questions that the DeCenter should answer under the topic of the panel. Or if you have 1 or 2 other big ideas that are not related to the panel that you think the DeCenter should be addressing, please share that as well. That's why we have these easels up around for you to write those 3 big questions and any other 1 to 2 thoughts about what the DeCenter should be doing. So that's why we invited all of you, the thought leaders in this space, to help us ask the right questions. After the first panel, we'll have a fireside chat over lunch with Elizabeth Stark, the founder and CEO of Lightning Labs, and that will be with Lynn Alden, the founder and analyst of Lynn Alden Investment Strategy. We have a panel on technology challenges in blockchain, which will have a table breakout after that about the technology questions we should answer. Now, panel 3 was originally meant to be a keynote speech by Sam Bankman-Fried. And in the classic optimistic lens in which I view everything, when things blew up, I thought, well, that'll make it an even more interesting keynote talk. But he ended up, because this is an in-person event in the United States, declining to come. And so we pivoted to say, let's make it a discussion, a panel discussion about the demise of FTX and other crypto entities. What lessons can be learned from that? Following that, we'll have our 4th panel on really on the societal implications of decentralization of power with a breakout session, and then we'll have closing remarks by our provost, Debbie Prentice, followed by dinner. So that is the way the day is going to roll out, and now it is my great honor to be able to introduce our president. So Christopher Ludwig Eisgruber has served as Princeton's 20th president since July of 2013, and he served previously as the Princeton Provost for 9 years, beginning in 2004, after joining the Princeton faculty in 2001. So we've benefited from his leadership over a very long time, and it's apparent in everything that's happening in transforming Princeton. As president, Eisgruber has led efforts to increase the representation of low-income and first-generation students at Princeton and other colleges and universities. Princeton's socioeconomic diversity initiatives have attracted national attention in the New York Times, the Washington Post, 60 Minutes, and other news outlets. We are viewed as the leader in the country with respect to financial aid. Eisgruber has also been a leading voice in Washington and elsewhere for the value of research and a liberal arts education. He's emphasized the importance of both free speech and inclusivity to Princeton's mission, championed the university's commitment to service, and launched initiatives designed to fortify Princeton's connections to the innovation ecosystem in New Jersey and beyond. And when JP mentioned that we want to grow the innovation ecosystem around this particular space, it's part of that broader context of growing innovation, making Princeton a catalyst for a high-tech region across the entire state. Eisgruber received his AB in physics from Princeton in 1983, so the great class of 1983. Did I say that correctly? I'm still learning. He graduated magna cum laude and Phi Beta Kappa. He then earned a M.Lit in politics at the University of Oxford as a Rhodes Scholar and a J.D. cum laude at the University of Chicago Law School, where he served as editor-in-chief of the Law Review. After clerking for U.S. Court of Appeals Judge Patrick Higginbotham and U.S. Supreme Court Justice John Paul Stevens, he taught at NYU's School of Law for 11 years, and then we were able to poach him over to Princeton in 2001. That's when he joined the Princeton faculty as director of the program in Law and Public Affairs and the Lawrence S. Rockefeller Professor of Public Affairs in the School of Public and International Affairs and the University Center for Human Values. He directed Princeton's program in Law and Public Affairs from 2001 to 2004. Eisgruber was named Princeton's 11th provost in 2004, and in that capacity was the university's second-ranking official and its chief academic and budgetary officer. Eisgruber is a renowned constitutional scholar. He's published numerous articles on constitutional issues and testified multiple times before legislative bodies on the issues of religious freedom. His books include Constitutional Self-Government, Religious Freedom and the Constitution, and The Next Justice, Repairing the Supreme Court Appointments Process. That was written in 2007, so very forward-looking, I would say. In 2014, Eisgruber was elected to membership in the American Academy of Arts and Sciences, one of the most prestigious scholarly organizations in the country and the world. He received an honorary doctorate from the University of Edinburgh in 2015 and was elected an honorary fellow of the University College Oxford in 2017. He's a steering committee member for the American Talent Initiative and a member of the board of directors of the Association of American Universities. In the past, he served as director or trustee for Leo Lishua, Ithaca, and the Educational Testing Service. And I'll just close my introduction to say it's really been an honor and a pleasure to work with Chris these past 2+ years on Princeton School of Engineering, taking it to new heights of prestige and impact. Your bold vision for transforming the university and engineering within it will have a lasting legacy here. So thank you for all the work that you do. And please join me in welcoming.
Well, good morning. Good morning. It's great to see all of you here today. Excuse me. I want to start by thanking Andrea Goldsmith and JP Singh for leading this exciting and important new center. I also want to thank our, and I'm going to borrow your term, Andrea, our alumni founders, Pete, Joe, Dan, and Mike, whose vision and generosity were critical in bringing us here and enabling us to start this center. And I just do want to underscore the vision part of that. Andrea already alluded to some of these conversations that took place. The four of you were really important in convincing me, and I remember especially here some lengthy conversations with my friend Pete Brigger in convincing me that the topics that we're looking at today and that the center is devoted to have not only short-term and immediate importance, all you have to do is look at the agenda for the conference today, and that's apparent, but the kind of long-term and fundamental importance that justifies the continuing study of those topics at Princeton University. So I'm grateful for your leadership, I'm grateful for your generosity, and I'm really grateful to you for being here with us today. Thank you for that. Finally, I want to thank all of you for being here and for bringing each of your perspectives to this conference today and to our topic, namely the potential for blockchain technology to dramatically reshape and decentralize traditional centers of power in society. As I make these remarks, I realize that I am standing in front of a room where everyone quite likely knows a lot more about blockchain than I do. That was one of the criteria for the invitations that Andrea mentioned earlier. It's also a room with diverse perspectives on the subject. One thing, however, is very clear from where I stand. Princeton needs to be deeply involved in conversations about blockchain, and the aptly named DeCenter will put us there. At the end of last year, as I reflected on the incredible burst of Nobel Prizes that went to Princeton faculty and alumni, I said that one of the most important things that Princeton does is to place audacious bets on human talent and the big ideas that those talented people bring to the table. We make those bets in circumstances where we don't always know, in fact, where we can rarely, if ever, know where those ideas will land and what impacts they will have. What we do know is that we have the tremendous capacity to nurture innovation and to nurture dialogue, which involves convening broad expertise in an environment that values open discussion. Today we are convening around some big ideas, and we have with us some important innovators, scientists, and regulators. Princeton has already made important contributions to blockchain technology. We've done so directly through faculty research and indirectly through our alumni whose education here gave them the tools to build and invest in these new technologies. Now we stand at an inflection point. We have seen how quickly technologies sweep through society, changing the fabric of our lives and the ways that we relate to one another. Blockchain, as JP said earlier, promises novel opportunities to fix past problems. As he also said, it involves risks, some of which have made headlines in recent weeks. Where paths of such significance meet, Princeton has a responsibility to shine a light, advance the science, and help direct technology so that it broadly benefits humanity. This then is your charge for today. What are the biggest opportunities for societal benefit? How can we maximize benefits and minimize harms? I'm grateful to all of you for bringing us to this point and for helping us to imagine the future. I look forward to hearing about today's conversation. I'm glad I have a chance to stay with you for a little bit this morning and to supporting the work of this important center in the years to come. Thank you for your attention, for giving me a few moments of your time. I hope that the discussions ahead prove fruitful and engaging, and I'm now happy to turn the lectern back to those who know more about this subject than I do. Thank you again for being here today.
Thank you so much, Chris. That was a wonderful way to kick off the next discussion, which is with Chairman Rostin Benham. I'd like to invite you up for fireside chat. And I will join you after I introduce you. So let me do a brief introduction. So Rostin Benham was sworn in as the CFTC 15th chairman on January 4th, 2022. Following nomination by President Biden and unanimous confirmation by the U.S. Senate. Congratulations on that. Not easy these days. Chairman Benham previously served as the CFTC commissioner beginning September 2017 and as acting chairman effective January 21, 2021. Since joining the CFTC, Chairman Benham individually and as a sponsor of the CFTC's Market Risk Advisory Committee advocated for the CFTC's use of authority and expertise towards ensuring that derivatives markets operate transparently and fairly for participants and customers. Through his MRAC sponsorship, Chairman Benham convened leading market experts and public interest groups to engage in public dialogue on such timely issues as global interest rate benchmark reform, central counterparty risk and governance, and since the summer of 2019, climate-related market risk. Chairman Benham led the creation of the Climate-Related Market Risk Subcommittee to examine climate-related impacts on the financial system. The subcommittee's efforts resulted in the September 2020 release of the report Managing Climate Risk in the U.S. Financial System, the first of its kind effort from a government entity to examine this risk. Chairman Benham's arrival at the CFTC followed extensive experiences in financial markets policy. As senior counsel to Senator Debbie Stabenow of Michigan, his major responsibilities included the implementation of the Dodd-Frank Wall Street Reform and Consumer Protection Act and related policy matters affecting the Treasury Department, the U.S. prudential regulators, and the Securities and Exchange Commission. Prior to his work in the U.S. Senate, Chairman Benham held several positions in financial markets and financial market regulation and compliance, including as a proprieties equity trader in New York City, an investigator at the New Jersey Bureau of Securities, so he spent time in New Jersey before. Beautiful state, yes. And he also spent time within the state Office of the Attorney General and in private practice, focused on corporate and transactional law. Chairman Benham received his AB degree from Georgetown University and law degree from the Syracuse University College of Law. He lives in Baltimore with his wife and 3 daughters, who I'm sure ask you about climate change on a regular basis. So thank you very much. Please join me in a round of applause for taking time at this very busy time for you to join us. I know you are scheduled to appear before the Senate, and so we're very grateful that you could come and join us today. So I have some questions, and then we're going to open it up to questions from the audience. And I'll start with the elephant in the room, which is the demise of FTX and other crypto entities before that. What can you tell us about the lessons that you are taking away from the overall situation, including recent events, in terms of thinking about changes to regulation and other oversight mechanisms beyond regulation for this industry?
Thank you for the questions and the kind introduction. And it's good to be here and good to see everyone. As a quick aside, I did grow up in northern New Jersey, so it's good to be home. And you mentioned I went to Georgetown. I rode at Georgetown, so driving across the Lake Carnegie brought back a lot of memories from 25, 30 years ago, so it's good to be in Princeton. So yeah, very unfortunate situation that we're in right now, and one that, you know, the CFTC is actually very uniquely positioned within the crypto space, and it's because in many respects, when we think about the statutes that govern our markets and our banks, the definition of a commodity is very broad, right? So we have had an intersection with the crypto space, actually going back to 2014, which in the grand scheme of its birth and its origin and its evolution is quite some time. And I do want to level set all of this because I think it'll be important for folks to understand what our role is individually as an agency and then what it has been more collectively among other agencies in the U.S. government and overseas as well. And I've said this a lot, but I think it's really important to get context of what we're seeing from a technology perspective and then its intersection with financial markets and some of the events we've seen, you know, as you mentioned with FTX. And we had a regulatory intersection with FTX for a number of years now, which we were dealing with, which in many respects is about decentralization. All that said is, you know, we had a lot of enforcement actions against crypto-related projects and individuals and institutions. We have very limited authority over crypto because it's not, as many of you know, or if you don't know, we are a derivatives regulator, so we don't regulate cash markets in any commodities, whether it's agricultural commodities, metals commodities, or energy commodities. We regulate the derivatives that are priced off of those underlying commodities. But Congress provided a very limited authority for us to bring enforcement actions against cash markets or in cash markets if there's fraud and manipulation. And the underlying thesis or policy idea is that if there's fraud or manipulation in the cash market, there's going to be a correlation in the markets that we directly regulate. So we want to eliminate that correlation of fraud or manipulation. So since 2014, we brought 60 some odd cases in crypto, but the issue has been is since we don't have this direct oversight, we are sort of burdened by the fact that we have to wait for individuals to come to us and say, hey, you should check out this issue that we've identified, or I've been defrauded, or there's something going on and you should look into it. So every case we've brought is because of information that's come to us, and that's not traditional in what you would want or expect from a market regulator. You want to use those surveillance tools, you want to use that oversight authority to be sort of essentially surveilling the market in real time and identifying these trading anomalies or having registered entities and making sure that they're not commingling funds, there's no conflicts of interest, they have books and records that you can examine, that they have financial resources, all these core elements of financial market structure. So the next sort of pivot point for us was 2017. We had listed futures on Bitcoin, listed on one of our largest derivatives exchanges. And this was a pretty significant moment, I would say, is, you had an underlying market that was unregulated, a lot of skepticism and a lot of uncertainty about the market and how we would monitor the underlying market and how other regulators would monitor it and what the correlation would be between the cash Bitcoin market trading on some of these large trading platforms and the futures that were traded on our registered exchanges. Nevertheless, the contracts were listed. We've had a number of different exchanges list contracts on Bitcoin and Ether, and by and large, they've operated in an orderly way. We haven't seen anything anomalous or too many junctions from the cash market, but something that we're very mindful of and have been very we have scrutinized it a lot because of the uncertainty around the markets. So as this continued and as we got into 2018 and 2019, and you mentioned I was a commissioner and then became chairman in 2021, we've just seen a larger intersection of crypto native firms coming into our markets, buying existing firms and wanting to participate in the derivatives markets and issuing contracts on a number of crypto related projects. And since then, and I've been saying this, knowing and seeing this growing appetite for crypto and these gaps in the regulation, I've been very vocal in my sort of warnings that we have largely an unregulated market and that we need to have comprehensive regulatory reform over the crypto market. And I say specifically, I can only speak for the CFTC. Each agency, whether it's the Securities Exchange Commission or the banking regulators, have different authorities. They have different opportunities to intersect with the crypto market. But ultimately for us, I have to think about things from a commodity perspective. And I will just identify Bitcoin right now, right? Bitcoin is the largest of the crypto assets. And it is a commodity. I mean, I think there are legal questions and policy questions about the other tokens right now. I think the vast majority of tokens act like and are more like securities, but through judicial decisions and other analysis, it's fairly clear, and I don't think there's too much opposition to the fact that Bitcoin is a commodity. So we have this commodity trading in cash markets on largely unregulated trading platforms. Being intermediated by broker-dealer or broker-dealer type entities and retail and institutional customers buying and selling the asset. It is unlike any other commodity we have dealt with. Our markets are typically wholesale markets and they are risk management markets. Crypto has largely been a speculative retail-oriented market, and those are the things that concern me and I think have concerned my colleagues for many years now, is that we're seeing this influx of retail investors who don't have the appropriate level of sort of knowledge or information about the technology and the financial asset and are allocating capital to it. So as we're here today, FTX, and a lot of information, I think, to be determined, and we'll see how things play out within the bankruptcy. But at its core, we're talking about commingling customer money and house money. We're talking about conflicts of interest where an institution or individual has multiple hats and is acting in different capacities, which you can imagine in the regulated banking and market space does not exist. The idea of a regulated exchange also being a dealer, being a bank, being a custodian, That's just not even remotely possible, right? And that's sort of what we're seeing is likely happen with FTX. As I mentioned, books and records, accountability, audits, none of these core elements of market structure or financial regulation existed. And that's what are largely I've been advocating for, at least for the CFTC. And there have been a number of efforts in Congress, both in the Senate side and on the House side, to bring some sort of transparency to these markets and a regulatory sort of framework. I think this is what's going on right now, and as you mentioned, I'll be testifying in the Senate tomorrow, is going to sort of reinvigorate and probably elevate the need for a legislative action, and I think it will be comprehensive across all components of the crypto space. And hopefully, I think there's a need to take a step back and reflect on what happened to FTX, and make sure some of these existing bills aren't missing anything per se, but also it should not hopefully bring any element of pause. I think this is just really should push lawmakers, policymakers to move as quickly as possible, because what we saw in April with some of these trading platforms, Celsius, Three Arrows, Terra Luna, obviously similar situation. Obviously FTX is much larger, but we don't have the luxury of waiting, and I'll say this, I read something on the way up. An official from the European Central Bank made a comment, I guess earlier today, their time, about Bitcoin and this debate about regulatory validation, right? If you put a regulatory framework around the technology, are you validating it? And understanding that there are very, very strong opinions about the technology, both in favor and in opposition. But to use this word again, as a market regulator, I don't have that luxury to sit back and just think about what the technology may or may not become in the future. All I know right now is for many, many years, there is a marketplace that resembles the markets that we have historically known in America and in the world to trade financial assets. You have retail investors participating and allocating capital, and we need to put guardrails around that.
So that's actually a good lead into my next question. I think technologists often worry that regulation will stifle innovation. Innovators worry that regulation will stifle innovation. And I think in this space in particular, there's a concern that this area is ripe for disruption. Certainly the blockchain and the applications on top of it have disrupted traditional ways of doing business. And that's a good thing from a technologist and an innovation and societal perspective. So how do we ensure regulation, which moves much more slowly and tends to happen at a moment in time, how do we ensure that the regulation doesn't stifle innovation?
I mean, it's a hugely difficult question, and I think one that, this is why we're here today, I think, in many respects. And it's a very difficult balance, but I think at this point, given the technology, the use cases are still quite limited, and I have to think. Again, I have to think about things from a market's perspective, from a market regulator perspective, and in many respects, all the things that you identified, which I'm happy to sort of respond to and address, are very unique and separate from what I see every day, and the sort of market functionality of these tokens, which is again more driven by speculation at this point and less about use cases and developing projects. That may change next year or in 10 years, but we have to think about where we are now and what risks are being presented to markets, sort of acutely, but also more broadly. I think as we move past this next couple months and think about comprehensive regulation, which I do think will happen, it is going to be a very difficult question to balance the innovation versus regulation. I think given what's happened, there's going to be a strong effort by some to regulate the marketplace pretty vigorously. But there's going to have to be an advocacy, I think, to balance that regulation, to be able to identify the use cases, to be able to identify a curve going out into the future of what we might see and what the positive attributes of the technology are. I think from a market's perspective, and you talk about blockchain, what we've heard anecdotally from some institutions, sort of, within a sort of internal sandbox or some private projects they have, is utilizing blockchain for trade execution or settlement or reporting, right? And being able to have that consensus mechanism act as a facilitator for cleaner faster, more efficient execution. And I think principally thinking about that idea, that makes sense to me. I think I would need to be more involved in seeing how it functions and what the risks are to suggest that it might actually be able to come into the regulatory fold. But knowing what we do from a markets perspective and the focus on trade execution and efficiency in terms of execution, having an order book and reporting and all these elements of a trade from the beginning to the end, based on what I've read in literature that I've sort of informed myself with, I can see how some of the components of blockchain could certainly be beneficial. Now, and I think we should talk about this decentralized nature, right? Because that poses a whole different set of questions, especially for a regulator, right? We are accustomed to being hands-on, and I won't speak about my colleagues at banking regulators, but bank examiners are embedded in banks on maybe I don't know what life is like post-COVID for bank examiners, but they are essentially embedded in banks, and their office is the bank they regulate. So the idea of having a DAO, a decentralized autonomous organization, or DeFi generally, I think poses a lot of very difficult questions about what role does the regulator have, and sticking and anchoring ourselves to those core attributes of regulation, which are needed for market resilience and stability, and for healthy markets.
Okay. Thanks. That's a really meaty response in terms of thinking about this. Let me follow up. You're going to testify to Congress tomorrow. What do you see as the questions that Congress is grappling with? And from your perspective, what's the best possible outcome with respect to legislation? You said it should be comprehensive. What should it look like, particularly with respect to lending and exchanges, but maybe more broadly?
Yeah. So my thoughts anecdotally, I can't put myself in an elected official's heads. I've had many conversations, but based on what I've sort of observed, I think a primary question is, what is the technology? And going back to that validation versus regulation question, I do think, given what's happened in the past few weeks with FTX, and then in the spring, and then BlockFi, which occurred in the past few days, their bankruptcy, these are real tangible events where constituents and customers and investors and Americans are getting hurt. And we can't stay on the sidelines, and I think this idea of, academic venues are great to think about things and to have, sessions about what if and how and hypotheticals, but I've always thought, as a market regulator, more so than any type of other regulator, inaction is paralysis, right? You have to move, and when you see something, you have to be deliberative, you have to be thoughtful, you have to engage, but waiting around is actually going to potentially only lead to greater problems of higher scale, and that's a risk, right? So I think that's a core question that Congress is going to have to grapple with, most likely in the new Congress. A second question, we should talk about stable coins, something that I've been very clear with Secretary Yellen and others in the government and publicly as well, that not something in the remit of the CFTC. I think at its core, like I said at the beginning, probably a commodity, but functionally more of a payments mechanism and a banking product, so likely going to be I would say possibly regulated as a banking product, and there have been a number of legislative efforts to sort of bring stablecoin issuers into that regulatory fold. But ultimately, what are we thinking about from a stablecoin perspective is market resiliency, and then more importantly, financial stability, right? You've heard a lot of these anecdotes about stablecoin issuers who have huge, vast sums of reserves of cash, of fiat, that they exchange for the stablecoin, and they invest the fiat into money market funds, into treasuries, into so-called high-quality liquid assets. But there have been enforcement cases, and the CFTC did bring one against the stablecoin issuer, where the investments were not necessarily in high-quality liquid assets. So what happens if you have, not unlike FTX, a run on a stablecoin, and then you have destabilization of a money market fund or a treasury market? Obviously a much greater scale than what we're seeing right now, but at its peak, the amount of stablecoin investments was quite significant, I think close to 50 billion, if I recall correctly. So stability, market resiliency, and then ultimately, as you pointed out, let me narrow down on the two things, the markets and then the lending platforms. On the markets platform, it really is, and I've said this many times, and I think this will be a topic of a discussion for tomorrow, we have to reflect on what happened with FTX, but ultimately it's about implementing the core elements of market structure that have worked for decades. I'll very much acutely focus on futures markets and derivatives markets. If you look at 2008 and the financial crisis, futures markets actually worked quite well. The cleared futures markets were, to use an example about the Lehman Brothers book, the futures book was actually quite easily sold and ported, and customer money was where it was supposed to be. That model, the futures model, ended up being a model for the swaps reform, which was credit default swaps and interest rate swaps. These were unregulated markets prior to 2010. It was a model for the futures market was a model for swaps. And then what we're seeing right now is a discussion around treasury market reform and clearing treasuries. And this is also another thing that's being used, the futures market as a model. So it is sticking with those core elements of eliminating conflicts, eliminating commingling of customer money, having transparency around the regulated trading platforms, around the broker-dealers, around the custodians, around any intersection or introducing broker, having reporting requirements, all these things that we've known so well. On the lending side, more on the prudential banking side, but this is another interesting question, because I think we have to think about what is the utility of these lending institutions, right? Is it purely to get leverage and to speculate, or is there some use case that you're staking or giving your collateral to essentially a creditor and getting some leverage out of it? And I don't think we're quite there yet, and I don't want to suggest any skepticism or pessimism, nor do I want to suggest any optimism, but I think we have to think about what is the point of these platforms, why are we using them, what are the risks, and quite frankly, do we need them? Because right now, with what we saw in the spring and what we've seen with BlockFi, they feel like just tools to get leverage and to speculate, right? And I think that's going to be another issue that Congress is going to have to grapple with. So a lot of issues in this space. I've obviously been very focused on the markets perspective, on the commodities perspective, but I think as we get into the new Congress, you're going to obviously have discussions around lending, around custody, around blockchain, around markets, tax policy, and the like. So it's going to be an uphill battle, but I think folks will be pretty determined to get something done.
You mentioned earlier there's the SEC, there's the CFTC, there's other agencies within the government that will be part of this regulatory oversight. How do you see the different agencies' roles, and how will they interact and intersect in those roles?
Yeah, I say this often, right? It's probably an imperfect system that we have. We have a lot of regulators, both on the market side and the prudential side. But it's one that I think is proven to be resilient, effective, and has been built up over time. If you think about the history of the CFTC, we used to be a part of the Department of Agriculture because of the natural relationship with the origin of futures, and we were only spun out in 1975. But we actually go back to 1922 was the initial authorization of the Commodity Exchange Authority. Securities and Exchange Commission, obviously going back to 33 and 34, FDIC, CFPB, the Fed, going back to 1913. I mean, these were all events in time which you can identify why these institutions were created, sort of most notably following crises. That all said, we have what we have. I think it's quite effective. We have great venues to collaborate and get together. This is the President's Working Group, which is an 80s era group of the Fed, the SEC, the CFTC, and Treasury, and then the Financial Stability Oversight Council, which is a Dodd-Frank era council, and that's a much larger group of market regulators, including state and insurance as well. But it's going to be a legislative and an administrative effort to figure out where these products land and fall within the existing jurisdictions, and where the authorities may need to be expanded. Closest to my responsibilities, obviously, is a discussion around securities and commodities. This is nothing new in terms of a debate between the SEC and the CFTC. We had this debate almost 45 years ago with respect to security futures and commodity futures. We had this debate over 10 years ago with Dodd-Frank with security swaps and commodity swaps. And in my view, this is just another evolution in that discussion in the relationship between the two agencies to identify security tokens and commodity tokens and to leverage each of the agencies' expertise to oversee the market. This is where I talk about gaps, we at the CFTC just do not have authority to oversee commodity tokens, and that's what worries me the most. And whatever Congress chooses to do, it's obviously in their discretion, but we have to fill that gap. So we'll continue to work together and thinking about the lending question you had, right? That to me is a pure banking prudential responsibility, the tokens, the stable coins, again, in my view, a prudential authority. So difficult questions, but not anything we haven't done before and not anything that I don't think we can accomplish pretty efficiently.
Okay, I'm going to ask one more question, and then we'll open it up to audience questions. So you recently made headlines at the NYU Fireside Chat by saying that Bitcoin might double in price if there's a CFTC-regulated market. And tomorrow you're speaking to Congress regarding the FTX collapse. So the two questions I want to ask you before we open it up is, first, what message do you want to see coming out of your talk today, this discussion? And second, as we look to define the work of the DeCenter, what's the most pressing question where universities can help lay policy and technology foundations for the future?
Yeah, I'm going to take the second question first. I've actually had a number of trips. I was at NYU, as you mentioned. I was at Penn a few months ago. So I really enjoy coming to academic institutions and having these discussions. And I apologize for not being able to stay the whole day and hear the discussion because of tomorrow. But for a regulator where you oversee and you interact with a lot of institutions and individuals who have clear vested interests in outcomes, right? I have a very clear responsibility to be objective, to apply the law, to not pick winners and losers, to be technology agnostic, and to make sure that we are fulfilling our mandate as a market regulator. And in many respects, that's easy, but in many respects, it's very difficult, right? And you just have to stay focused on sort of the mission, the mandate, and doing the job, and trying to silo and ring fence yourself from the advocacy from all different points. And I think this is, hearing what the president was saying and the initial remarks that you made about what you're trying to accomplish. There's so much possibility, and I don't mean that in a positive or negative way, with this technology. And I think it's so important that we collectively think about what are the risks, what are the opportunities, and having objective, thoughtful, deliberative conversations about the technology and what roles governments, agencies, regulators should play. Because, when I think about DeFi and issues like that, these guardrails, these barriers, these points of intersection have been built up over decades, and they act for good reason, and protect people and create these checkpoints almost. But on the other hand, we're seeing technology move so quickly and so fast, and if we can create efficiencies and better, from a market's perspective, as I said, better execution, these are the things that we have to balance and figure out. And that's why I think discussions like this today and getting input from you directly or indirectly is always helpful for me personally. And I think I would bet my colleagues across the regulatory sphere share the same thing. Going to your first question, I would say, as a takeaway, we are at an important juncture right now. Obviously, extremely unfortunate what's occurred in the past few weeks. But as I said, something that I've been very vocal about, seeing this void and this vacuum in the regulatory space. So I hope these events, to the extent that we can get through the pain and the losses and sort of unflesh all that, we have to use it as a springboard to act quick and in a comprehensive way, because I fear, it's just going to happen again if we don't do something quickly. So I'll continue to advocate and hopefully do events like this, and I'll say this tomorrow in Congress. But it's just important. It's just too important to act right now, because we can't risk another bankruptcy or another failure occurring in the near future.
Thank you so much. So let you make any final remarks that you want to close the panel with.
Thanks for having me. It's been a great discussion. All very difficult issues, and I would, again, apologize for not being able to stay longer today. Going to do some prep for tomorrow, and head back to Baltimore and Washington. But really look forward to keeping in touch and some of the conclusions that you make today. But these questions are the questions that are on point and help me, inform me to do my job better. So to the extent that you have thoughts or suggestions, please, don't hesitate. We all benefit from this deliberative conversation. So
yeah,
thank
and
you.
we will be documenting the conversation for participants. So we are sorry you can't stay the whole day, but are so grateful that you joined us and subjected yourself to the questions, which were not that harsh given some of the dialogue that we've seen on the outside. So thank you so much for joining us. We really appreciate it. Please join me.
Thanks.